Are you stuck spinning your wheels trying to find a trading system that actually works? I've been there. But this past week, I traded the simplest strategy that I've ever used and ended up the week with a whopping 100% win rate. No fluff, no fancy indicators, just clean execution. So let me break down the trades from this week and show you exactly how you can do the same. If you're new here, I'm Marchelino, an aspiring professional accountant and an aspiring funded trader documenting the real, unfiltered journey of mastering both of these worlds. This is the modern day trader, where we dive into my trading journey, personal finance, and real life lessons that comes with chasing financial stability. If that sounds like something you connect with, hit the like button and let's jump straight into it. Now, before we jump into the exact rules for this strategy, I want to show you the 3 trades that I've taken this week, how I managed them, what I was looking for, and how they played out. This way, you will see the strategy in action before we break it down step by step. So make sure you stick around until the end, because I will be giving you the exact breakdown of the strategy rules so you can apply it for yourself. But I'll also speak about why even a solid strategy like this still loses, and why risk management is absolutely everything. Alright, let's dive into the trades that shaped this week. The first one actually came from last week, Friday, and as I mentioned in last week's review, when we were trading in around this area right here, we were in drawdown when the market was closed, and I mentioned that we'll see. At this point, price action didn't trigger my break even, and I just let it run. And I mentioned, and you guys can go check that in my weekly review. I think it was weekly review 50. And if you caught that previous weekly review, you remember that this trade was still floating at break even, as I mentioned. Fast forward to Monday the 26th, and boom, take profit was hit, baby. Take profit was hit. And I just feel like there's no other feeling than what you like, than a take profit being hit. Now, obviously, if we're looking into technicals, it wasn't a trade that was placed this week, but emotionally, it felt a strong way. It was just felt very, very strong way to start the week. And a win is a win. That said, Monday itself was a US bank holiday, so no trades were executed. Liquidity was fairly thin, and I'm not in the game of forcing trades when the conditions aren't right. If I had executed, it would have been a short, if I'm correct, and it would have gotten taken out at break even. So I was sitting on my hands, and that actually worked out. Now, if we fast forward into Tuesday, this is where things got interesting. There was no red folder news after the Chicago Mercantile Open, which is the first thing that I look at when I plan my week. This then gave me the green light for potential trade opportunities. So we start by marking out the high, the 15-minute high, and we usually do this on the 5-minute time frame. So let me show you guys how we do this. So we start out by marking the 15-minute range high and 15-minute range low. Let's zoom in here. So we mark out the 15-minute range high and the 15-minute range low, as I mentioned, and we simply just wait. We wait for a 5-minute candle to break and close above the range. Once it happens, we in. The long position was taken. The stop loss was placed just below the 15-minute range low, targeting a clean 1 to 2 risk reward. The rest, you ask me, is all history. One thing I'm still trying to get used to, though, is the time these trades are held open. And you can see that they actually run for quite some time. This one in particular ran for just under 21 hours, which is completely wild. especially for somebody like me who's used to faster paced setups. I'm used to getting in within, and like getting into a trade, and within an hour or two the trades are playing out. But I do have to mention, I'm learning to hold, trust the plan, and let time do its thing. Now, Wednesday was no trade day. Why, you ask me? That is purely by design. We had red folder news in the form of FOMC meeting minutes after the CME Open around 8 p.m. South African Standard Time. And when high impact news is on the deck, I'm out. Simple as that. And those are the simple rules that you need to put in place in order to make you stand out in comparison to the rest of the traders. That is the small things that you need to do in order to be impactful in the markets. Now, Thursday's trade played out almost identical to Tuesday. Same process, same structure, same clean execution. We started the session with high and strong momentum and volume in the first 15-minute candle, which is denoted by this 15-minute high, that 15-minute low. And this essentially gave us our trading range. So just like before, we mark the high and we mark the low of the 15-minute range, but we're doing this on the 5-minute chart for precision. Now, based on the bearish momentum and the sentiment in the market, I was anticipating shorts. This is something that I've noticed, that when we have these high volume movements in the first 15 minutes, there's a high chance that price action will actually break out in that direction, right? And as expected, once the 5-minute candle broke and closed below that 15-minute range, that was our trigger. I entered short, placed my stops above the 15-minute high, and let the trade play out. Like always, once price moved one standard deviation in my direction, I went break even, and the rest, to be honest with you, was all history. But let me mention, we did experience some consolidation, and if I come back into my actual trade that I captured, we experienced some consolidation around that area of the one standard deviation, which tested my patience, to be honest. But no panic and no interference. The trade stay opened for over 24 hours, pushing right into Friday's CME Open. And if I go back to the charts, you can see that the CME Open is denoted by this white area. This is where the market is closed. The white area is where the market is open. So obviously we took a trade on Thursday. We pushed all the way into Friday's CME Open. And that is something that is just crazy to me, having a trade open for 24 hours. However, eventually take profit was hit. Another 2% return in the bag. Now, if we include Friday's TP from Thursday's trade, or from last week, sorry, that brings the total return for the week to 6%. But if we isolate in trades, so if we include this trade right here in our results and our returns, then that then means that we have a total of 6%. Obviously, if I go to Friday the 23rd, let me go Friday the 23rd, there we go. You can see that that brings our total to 6%. However, if we isolate in just the trades taken this past week, then what you will see is that we're looking at a 4% return with a 100% win rate. No losses, just execution. And since Thursday's trade ran into Friday's open, no trades were taken on Friday, no forcing setups, no revenge trading, and you can see what sticking to the plan does. And just take a look at this equity curve. So just sticking to the plan and trading the script is the answer. Now let's break down the exact rules of this mechanical strategy that I'm using. The one that removes all thinking and decision fatigue. Number 1, plan your week using Forex Factory. Check for any red folder news events after the CME Open at 3:30 South African Standard Time. If there's red folder news after the Open, that day is a no trading day. Simple rule. No news equals to a trading day. Number 2, mark the first 15-minute range on NQ right after the CME Open. Do this on the 5-minute chart. Number 3, wait for a breakout of the range. You are looking for a clean break and close outside the range on the 5-minute time frame. Number 4, market execute as soon as the breakout candle closes. Number 5, stop loss goes just outside the opposite end of the 15-minute range. For example, if you go in short, your stop goes above the 15-minute range high. Number 6, go break even once price moves one standard deviation away from your 15-minute range. Number 7, if your trade is still open when the next day's CME session begins, you do not take a new trade that day. Let it play out. And that's it. A simple, repeatable system that everyone can follow. With a week like this behind us, it's easy to get excited, and rightly so. But let's keep it real. This strategy still loses like every other strategy. If I zoomed out over the past 2 months, my win and break-even rate sits at a whopping 70%. And that's great, but that's only one part of the picture. What matters more than any win rate is risk management. Staying consistent, following your plan, and trading the script just as it is written. So there you have it, traders. A clear, mechanical system that delivers returns with little to no emotional deviation or interference. So remember, guys, that failure is feedback. Feedback is knowledge, and knowledge is power. And with that being said, I hope you have a profitable week, and I hope you have a productive one. From your boy Marcy at the Modern Day Trader. Peace out, man.